Hi guys, welcome to today's episode of Trade of the Day. For today, the pair that we'll be looking at is the dollar CAD. And what I like to do for analysis is always to start with a top-down approach. And what that means is to start off with the monthly, the longest time frame, and then work my way down to the weekly, to the daily, to the 4 hours, and possibly even the 1 hour. Now, when it comes to technical analysis, what we like to do is we like to focus on the more recent prices. In technical analysis, everything in the past is relevant. However, only the present, the more recent prices will tell us whether prices are going to go up or prices are going to go down. Right, with that, let's begin. Now, we have here on the monthly and the graphical resistance that I see is this level here, right, where price actually spiked and rejected once in the past, and recently in March, price spiked and rejected again once as recently as March. Now we can confirm this by means of using a Fibonacci retracement from the swing high here to the swing low, because we want to see how far price can retrace upwards. So with that, let's take a retracement. Open up all Fibonacci ratios. And we see that this graphical resistance falls right on the 78.6 retracement, which is a key level. So we can call this our long-term resistance. Now it's a bit hard to see the support levels here because price sort of makes zigzag movements. So I'll take a retracement again from the swing low here to the swing high where price spiked recently, and open up all Fibonacci ratios. Now for all these ratios, all the different levels, we see that actually it's the 50% where price tapped and reacted. Once, tapped and reacted another time, right? So we would select the 50% Fibonacci ratio, and we can put our long-term support at this level. So let's call this our long-term support. Now that we have our long-term support, long-term resistance, let's go down to the weekly. Same thing on the weekly. We actually see that price has made a sort of drifted higher before going sideways and then making one sharp push up to the long-term resistance. So because price is actually quite close to the long-term resistance, we can consider that the long-term resistance can also be our weekly resistance. Right, let me tidy this up. And what we want to do is to find our weekly support. Now, if I were to draw a line across here, right, across this level, we'll see that price came back, tested this level as resistance 1, came close twice. This could be a strong graphical level. Just change this color. And how I confirm this is because price made a push up here. We want to see how far price can retrace backwards. So we take a retracement. Right, we open our Fibonacci ratios and we see that this graphical support level for the weekly falls on the 38%. So let's call this our weekly support. Now that we have our weekly resistance and weekly support, let's go down to the daily. I will remove the long-term support because it's too far away. So it'll take a pretty long time for price to ever go there if it does. For this, I'm just going to tidy up the page so that we can actually tell the difference and see things clearer. Right, so we want to focus on the current prices. So we see that recently price after rejecting of the long-term resistance made sort of a push down and then it bounced up. So we want to see how far price can bounce up, and that means we are looking for the daily resistance. Graphically speaking, I see some sort of level over here, or even if I were to extend it back, this could be a level for daily resistance. Why I say so? Because price tested and rejected before breaking, coming back to test this level, and then rejected this level, and now it seems to be coming back again. So this can be a graphical daily resistance. So now that we have this, let me confirm by using a Fibonacci retracement from the swing high to the swing low, and then opening up all Fibonacci ratios. And we see that it falls nicely right on the 61.8, which is a key Fibonacci retracement level. So let's just select the 61.8, and we have the daily resistance. Now, because price actually sort of rejected off the weekly resistance and long-term resistance, come down and then a bounce up, think price would actually resume this zigzag movement and go down after that, right? So anywhere below the daily resistance, we can afford to be bearish. Now we want to find the daily support, and graphically there is sort of a swing low here. So I'll take a low here. Let me just change the color, call this the daily support. And two ways of finding this is, one, we take the zigzag of this pattern to see where this daily support lies. Another way is we take a retracement of this whole thing to see how far price actually retrace backwards. Right, so let's do both. We start off with the retracement, the extension, sorry. Okay, the extension doesn't falls nicely on the, not a major Fibonacci extension ratio, but nonetheless one of the important ones as well, which is the 50%. And if we were to do a retracement from the swing low here to the swing high, open up all Fibonacci ratios, see that it's also close to the longer term 50%. But because this one falls just right on it, we will take this level instead. So now that we have the daily resistance, daily support, how do we play this trade out? We go down to the 4-hour. Right, let me just tidy this up. Okay, so what we have here is that price is, we expect price to actually make a push up towards the daily resistance before coming back down. But if I were to change this to close, we see that price actually tests this entire level about the same, price actually tests this same level, right? So this could be an intermediate resistance, right? If I were to draw a horizontal line to put intermediate resistance, right, price, and I will extend it further backwards, can see that price actually tests this level many times here and recently as well. Okay, so I will actually call this the intermediate resistance. And for the trade of the day, this is what I'll do. I would actually short right at the intermediate resistance. Right, I'll go short at the intermediate resistance with the daily support as my first take profit, right, the TP1, and my weekly support as the final take profit, which is the TP2. Right, this intermediate resistance on a 4-hour can actually be my sell entry. Now, my daily resistance here will be the stop loss. Okay, why the daily resistance is the stop loss is because if price were to come up to the daily resistance and close above the daily resistance, my bearish idea is invalidated and I will actually go long and play towards the long-term resistance instead. So that's all we have for today. For today's trade of the day, the dollar CAD. We're bearish. Sell entry at a 1.42 level, and the first take profit at a 1.38 level, and the stop loss at a 1.43 level. Thank you all for tuning in. Stay safe and take care, and I'll see you guys tomorrow.